So can you get into a little bit of how you find your deals? I mean, it's got to be because there's so much competition. I mean, so many people over the last 5-6 years since COVID, especially, have gotten into the multifamily space. How do you find your deals?
I mean, so we've kind of built a reputation up now where, I'm again fortunate to have brokers and stuff who know who we are, and we have a decent resume, so they'll bring us deals. But we still have people that are hunting every day, making phone calls to, stuff that's on market, off market, things like that. It's more of a volume play, So everybody kind of looks at it and says, I've had more than one person ask me, how do you find some of these deals that are pretty good deals? There's nothing crazy sexy about it, right? It's a numbers game. If you're looking at 10, 20, 30, 50 deals a month, eventually you're going to find one, through the course of 12 months.
Yeah. Planting seeds.
Yeah.
Right? Just planting seeds. And I know you throw in a lot of offers. So like what percentage of offers do you think, like how many deals does it take? How many offers does it take before you lock in a deal?
So two-part. So yes, we do put a lot of offers out, but I used to put a lot more offers in than what I do now.
So now you're more selective.
Yeah, and I just, again, in the beginning, you got to pay your dues. Like you're a nobody, right? The brokers and everybody who's got deals that potentially are a fit, you're not top of mind.
Right.
You're not the one they're thinking of. Right now, once you've done a few of these and you've become a little more, relevant, then they bring you some stuff that, has a higher percentage of fitting your buy box.
Got you. No, it makes sense. It makes sense. You built a reputation, and you're one of those guys that when someone has a deal come across their table, you might be top 3 people they call.
Or somebody's going to have a drinking podcast, they're going to call me first, right? So I get it.
I would always call you first, buddy. So I know a lot of people might get into multifamily. They might invest in multifamily, but there's a lot of different ways multifamily deals are structured. How are your deals structured, and how are your deals? How do you set your deals apart from other multifamily deals?
So, I mean, at the end of the day, I think what's important, for any deal, for anybody who's getting involved in them, is you want to make sure that you've done your homework on the operator, right? Who you're getting involved with, right? Absolutely. So that's a big part of it. But that aside, once you've done your homework and you feel comfortable with who's running the deal, obviously then the returns are important, right? So on most deals, we'll bring on average, call it 70 or 75% debt to the table, right? So I'll sign for a loan for 75% of not just the deal itself, but also the costs, the construction, everything all included, right? So the bank will lend us, call it 75% of that full cost. Gotcha. And then we'll bring in the other 25% with our own cash, and then, obviously investor money as well.
So you say investor money. Who is your typical investor? And why would that person invest money with you?
I don't know why.
Great question.
Yeah. No, we're very fortunate to have a strong base of investors that have been with us for quite some time, right? So invested with us on multiple deals. When we have a new deal that comes up, we'll put it through the database, we'll send out the message, and more often than not, we get it to fill up pretty quick. But that took time to build. So
again, you built your reputation.
Yeah. But the core, I would say, probably the majority of the investors we have are just people that are independently successful in whatever business they have, or a lot of our people are in the medical space, right? A lot of doctors and dentists and surgeons and orthopedics and all kinds of different parts of the medical field. But they're all people that are just busy making money in what they're doing. Yeah. They're doing well with that, and they just have a desire to get into real estate, but just don't know how, or just don't have the time.
Yeah, and I think that a lot of people, they have the money, they have the means, but number one, like they don't have the knowledge, like you said. So instead of the money sitting in a bank, earning very minimal interest, they can find something like you, where explain the difference between let's say $300,000 sitting in a bank and $300,000 invested with you. How big of a difference are we talking?
You use even numbers, right? So it's simpler numbers. So if it's $100,000, let's just say they have it parked in a money market account, it's making 4% or something around there. You're making $4,000 a year, right? If you have it parked with us in a certain project, and most of our projects are double-digit returns, that'll range from 10, and some of them have gone all the way up to 25%, right? So let's just say you're getting 15%, right? Instead of making $4,000 that year on your money, you're making $15,000. I mean, that's a pretty hefty difference. That's a pretty big difference.
Yeah. That's awesome. Wow. It's crazy.